Good day, folks. Quick market update and a chance to try out my new microphone. So let me know if the sound's improved in the comments. I think it will be better. So we're on the energies chart. So let's have a look at this while we're here. We've got uranium, natural gas, and Brent crude and WTI. So let's start with the Henry Hub futures price at my broker at Black Bull. You can see we're trading in this upward channel. This is the 4-hour chart. And the day chart also shows that we're moving higher. We've got higher highs and higher lows, which means we're now in an uptrend on natural gas. We've also closed above this very key level at 2.25. I'll link the last video at the end of this one. It's really important that you watch that too. So we're above the 200, the 20 and the 50 period moving average. We're at the 100. That's this line here. And I'm going to switch this across to the NYMEX chart now. So here we've got the Henry Hub natural gas futures over at the NYMEX, and it's a chart you'll be very familiar with. We've looked at this over and over again. There's the triple bottom. Earlier in the year, we bounced up, retraced 78.6% down towards this gap. We didn't quite fill it. We tried twice, made a double bottom, and we've now got this W-shaped formation. My target for natural gas is $3 and maybe slightly higher, 320, 340, 50, 60 or 75. Having said all of that, let's look at the 4-hour chart quickly here. And you can see we're trading in this very nice, smooth upward channel. I don't like upward sloping channels. I want to see the price break out through the top dramatically and forcefully. The longer that we stay in this channel and sort of crawl and creep up it, the more likely it is that we'll break down through the bottom. Also notice we haven't reached the top of the channel on this last rally, forming a very small double top here. So a slight concern for natural gas bulls. I'm one of them, so we'll watch this very closely. I'm trading the Henry Hub futures at Black Bull, but I'm also trading the spot price at Pepperstone. So let's have a look at this chart. Now we've also got an upward sloping channel. On this occasion, we've touched it multiple times, actually 1, 2, 3, 4, 5. Once again, a warning sign. 5 touches is quite a lot. We want to see this now break through, get through the top very quickly, dramatically, as I said before. But a failure at the top here in this sort of insipid rising channel, as I said on the previous chart, I don't really like it. And in order to sort of negate this potential bear flag, we want to see a parabolic move through the top. So maybe we'll get that this week. I'm hoping that we will. We've got the Fed rate announcement tomorrow. That's going to be super interesting. It's going to affect everything that we trade. There are rumors that the Fed will cut 75 basis points. I don't think that's likely, but I think it's more likely we'll get 50 basis points than 25. Let's have a look at the CME Fed Watch tool. Let's have a look at that together. And that will show us that actually the market believes that we're getting a 50 basis point cut and not 25. Let's have a look quickly. So this is the CME Group Fed Watch tool. You can check this out yourself. It's free. Next FOMC meeting, 1 day and 7 hours. That's tomorrow. Let's have a look at what this is saying. Currently, 67% chance of a 50 basis point increase and only a 33% chance of a 25 basis point increase. In my experience of observing these numbers, that's a pretty decent chance that we'll get 50 and not 25. Bear that in mind. Once we get up to 80, we may still do that before tomorrow. If we got up to 80% for the 50 BPS cut, that would almost sort of cement it, solidify it in place. So we may be looking at 50, not 25. I don't think we'll be going 75. Let's go back to the charts. Keeping that in mind, all of these charts will be affected, including natural gas. For now, any dips should be contained to 2.25, and the target for this rally is initially 2.5 to 2.55, and then $3, $3.20, and then maybe a bit of a pause and a pullback, and then 340, 50, 60, or 75. Right, that's natural gas. And in this video, because I want to keep it short, we'll just have a look at Brent crude and WTI. Here's our positions on WTI oil, still aiming for a move down into the 50s and 40s, but let's start with the low 60s. So here's this downward sloping channel. There are our short positions. We just entered another one there a couple of days ago. This is the day chart on WTI oil. Let's have a look at the weekly chart. And there you can see we're bouncing off that support level, that green level there. The trend remains down, and I think that oil is moving down towards this red arrow here. And that's down at about $62 to start. That's the bottom of this sort of order block range, big range, messy range actually on WTI compared to Brent crude. And it's also the bottom of this channel, and we'll be in an oversold situation if and when that happens. A good idea for oil is to look at the Brent crude chart, often a neater and better chart to trade, easier chart to trade. And what's interesting about the Brent crude chart is that we have broken down through support. We broke down through this green line, multiple bottoms there. We had one little spike low below there, and we've now moved down on this last spike in this last week to 68.63, and that's not quite at the bottom of this previous spike on the left-hand side. Let me drag this across because I think my face is in the way. So that's it there. That's actually at $65.80-ish. we didn't get quite as low as that. So plenty of potential for this to go down. We have a flat bottom break on Brent crude. That means we should continue to move downwards. We might get a few bumps and retracements, particularly during this week with a Fed interest rate announcement, which everyone expects will be quite a wild time. First cut in about 3.5 years, which is going to be interesting. So that's it on the fluid energies, if you want to call them that, fluid or gas. Let's have a look at the solid energies, this metal, uranium. And we're long on uranium. We got long on our last tranche down here at about $4.29. That's on UEC. And we also have a position from over here. So we've moved into some profit on UEC. That was a nice bounce, making a double bottom over there. And then the same on URA. These are the two uranium instruments that I predominantly trade. We've got a long position from there and one long right from the bottom at that double bottom there. Big bounce, beautiful looking chart. We're above the 20-period moving average. We want to move up to the underside of this channel line. First of all, that green trend line and the moving averages and that order block. That should take us up to about 29, call it $30 on URA. But I think we'll get back into the channel and continue to move higher. This might be a big monthly spike down and back up again by the end of this month. Well, I hope you found that useful. I'll see you in the next video. Take care.
Spot price something like a dance. Contract signed with a chance. Regulators taking a glance. Riding on this finance trance. Trade the gas.